on. All right, let's move you on to our options insight, and Abigail Doolittle has that for us. Abigail?
Thanks, Scarlett. And joining us today for Options Insight is Alan Nuckman of Agora Financial. Great to have you with us as always, Alan. Happy Friday. And let's talk risk assets. I've really been curious for your view because I don't think that we've talked so much during the recent volatility. But prior to that, you had a pretty bullish, optimistic outlook. So now that we have the Fed behind the market, or at least a lot of people are giving that narrative for the rally that we've had out of the March lows, what is your view going forward?
Well, I think you're right. Follow the money, and there's a lot, buckets and buckets of money that are coming into the marketplace in support. Right now, it's more difficult because obviously we've had a very sustained rally. Let's look at where we are when we come to tech. The tech takeoff, we're only down 5% from the all-time tops. We've just made some new relative highs, and we've seen some stair-stepping of higher relative highs and higher relative lows in all the markets. But the S&P, the NASDAQ, and the Dow have not broken out and made new relative highs yet. So, but the price patterns are set up very nicely. It's a matter of getting on the right side of risk-reward because a lot of these stocks have had extended moves.
So, and the case can certainly be made around tech that it deserves to be so much higher given that many of those companies have done so well because of the work from home trend.
Right.
Speaking about another risk asset, oil, my gosh, what a year. At one point down 76% on the year, now coming back. I think actually the energy sector itself right now on pace for a 7th up week in a row, the longest streak since 2007, matching 2011. Is that sustainable? And is that a lot of those companies are smaller cap? Your trade's going to be on a larger cap, but a lot of those are smaller cap.
Right.
Is that a dash to trash, or is that oil? Because oil is actually down over that time period.
Well, I think it's what we saw in crude oil a couple weeks back. That was crude oil capitulation. That was the absolute worst psychology that the markets have ever faced. And since that time, we've been on a rebound. We bounced 275% in the June crude contract. Now, what happened in the May crude contract? Those people deserved, well, I'm not going to use the word deserved. Those people were in dangerous waters with sharks with no buyers and sellers on that last day because it's a physically settled contract. Everybody else was out on that Friday. So, you know, that's when you're dealing with the process of the delivery period. That's when strange things happen, and I think that's what put the bottom in the market. When you talk about crude. And if you look further out, if you look out to November, we're about $30 when we just go out to November futures contracts. So that sector has stabilized.
Yes.
And I think there's huge opportunities in a lot of those energy stocks.
And one of your ideas here, which we actually I'm going to share, is to buy a call in BP, that you think that that's a nice way to play the recovery in oil. Alan Nuckman of Agora Financial, thank you for joining us for Options Insight. Scarlett, back to you.
All right, thank you so much, Abigail.